Hi, folks. This is Lee with the Market Sense for the week of September 29th, 2020. Charts in this presentation come to us from the Trade Navigator software, and this is that weekly bond market chart. We've been expecting sideways, and boy, we got sideways. It's getting down so tiny here that you almost from an analytical standpoint, it's like a breakout's got to be imminent because they're just shrinking down too much. The problem is, from a fundamental standpoint, I'm not sure I can see how they can truly break out until at least after the election. And even then, I'm not sure. But at any rate, the only way to look at this from an analytical standpoint is to say if they go above 178 or below 175.16, that could be significant and they could show some follow through. And that is true. I just don't think the follow through will be massive because I still think they're going to remain sideways essentially, probably for the rest of the year. So I'm sorry this is so boring. Not a lot I can do about it. There's just not a lot of movement here, as you can see, and not much we can do with it. Stocks now, the S&P 500 is a surprising animal here. After last week's close, we were looking for support in the 32.55 area and thought it might be a good buy if they got down there early in the week because they have broken down first real sign of weakness we've seen since the lows back here in March. But this is kind of a normal 3-day break and they've stopped at the middle Keltner band, and that all makes perfectly good sense for a bounce back up to possibly even continue the trend. But I would like to get a chance to buy the support 32.55. Well, instead they've just opened higher and traded up to the 33.20 area, which is the initial resistance. So now we're looking at possibly 33.94 as resistance now. Um, this almost looks like it's too much too fast. So having been up there, I still think they might come down to this 32.55 support. Now the problem is, since they've already been up above 33.20, do I still want to buy that? That's very questionable, and it's especially questionable because we've got a slew of economic data this week, especially a lot of employment data. The ADP report Wednesday, the weekly report Thursday, and then the biggie, the monthly employment report on Friday. I'm sure there'll be a lot of focus on that. I'm sure there'll be some gyrations based on it, so it's kind of risky regardless of what you do at this point. This is less good than if they'd have been there early in the week, but I'll still take a look to see if they stall in this area because, again, even though this is more weakness than we've seen in quite some time, it might just be a retracement before they start back up again, or at least due for a little more of a bounce than we got. That's kind of how I'm looking at it. But if they start breaking 32.55 very much, I wouldn't have a lot of patience waiting for that because they have traded up to resistance first. And we have a somewhat similar situation in the QQQ here, only worse, if you will. They have just gapped up in a major way Monday morning, and they are almost up to the 278.30 area, which is now appears to be resistance for the week. If they can hold the 2070 area, and this is a little above 2070, it's about 2070.20. If they can hold that, that would actually be fairly impressive. They would look pretty good, and it would look like, as I said in the S&P, that this is more of a retracement, and they're going to try to get back into it again. It is certainly possible that they head down to the 263 area, and this is actually a few ticks above and below 263, so we'll just basically call it 263. If they get down there, they could still use that as support and turn back up. But as with the S&P, from being this high first, now getting down here would be a lot scarier. I wouldn't be anxious to buy. I'd want to look for signs of them holding before I waded in. And of course, this market has to worry about all the employment data this week too. So, be cautious, be nimble. It's the best way to be. So that's what we've got for you today. I hope you can find something profitable